Welcome back, and today on the topic money and banking, we begin on the commercial banks. As previously stated, banking is divided into three: understanding the central bank, commercial banks, and the non-bank financial institutions. So today's class, you're going to understand what is a commercial bank and the different activities or functions of the commercial banks. So commercial banks are banks that are formed with the main objective of making profit through financial intermediation. I wanted to understand that commercial banks form part of the aids to trade, just like insurances or insurance offices, among other things. Banks are aids to trade, but in themselves, they conduct a particular form of trade through financial mediation or intermediation. And the real reason when you engage in a business is to make profit. And banks make profits through three different ways. Number one is interest on loans. When you go to a bank, you borrow a loan of 10,000. You're normally given a particular interest rate, say 10%. So they calculate 10% of 10,000. And depending on the terms and conditions, whether you're paying once or over time or any way you want to pay, the interest is calculated. And when you're going to return the 10,000, you return it plus interest. And that is one major way of how banks generate income. Number two is bank overdrafts. So overdrafts are extended to customers, and they favor customers when you don't have any amount in your account. So the customer withdraws some money. Like I go to my account, I actually don't have even 10 shillings, but I withdraw, and yes, I'm able to withdraw. This is called an overdraft. But when I'm paying back, I'll pay plus a particular interest. That's the second way banks generate income. Again, banks generate income on day-to-day activities. For instance, ATM services charge ledger fees. There is ATM fees. So when you withdraw, there's an ATM charge. For example, you can go withdraw 10,000 and then you'll see withdrawal 10,000. ATM charge maybe 36 shillings, 40 shillings. That's another way the banks are generating income. Besides that, as I said, is ledger fees. If you will get to see the bank statement, you can realize we have a debit side, a credit side, and then we have ledger fees. So ledger fees are a way banks are also generating income. And lastly, we have investment, especially in the government securities. Government securities include treasury bills. You will realize that banks indulge in buying treasury bills on the open market operations. This we are going to understand more when we learn about the Central Bank of Kenya, or rather the central bank. But majorly, since we are in Kenya, we will learn about the Central Bank of Kenya and its operations. So there's a wide range of services offered by commercial banks. The first is accepting deposits. So when you and me take our money to the bank to store it there, then the bank accepts it. It means the bank is accepting deposits. And these deposits are a way of encouraging savings, because your surplus and my surplus, or your mommy and daddy's surplus, is therefore stored in the bank. The second way is they lend money. This is done through loans. You can apply a loan from the bank and you can get money that way. You can actually apply even a car loan, among other types of loans. Then the bank also act as a guarantor or a referee to anyone borrowing money. So when you borrow money, you are the person given the money. So we have someone loaning you the money, and then we have a guarantor. A guarantor is someone who signs that in case you default, then that person will be liable to pay the money on your behalf. And the banks can offer or can act as a guarantor to someone, and that means they can also act as a referee. The banks also safekeep valuable items. So commercial banks normally accept items such as title deeds or share certificates. Share certificates are traded in the capital markets, and you can take them to the bank and store them there. So the bank keeps them for you so that they are under safe custody. The banks act as intermediaries between savers and borrowers. From the first definition, or rather the first function, you realize the bank accepts deposits and offers lending, therefore creating a link between those who save and those who borrow. There is provision of foreign exchange. Every bank has a department for Forex Bureau. So foreign exchange is where I can change the Kenyan shilling to become a Korean won. I can change the Kenyan shilling to become the dollar or a Nigerian currency, the Tanzanian currency, or anything. So the banks have Forex bureaus or departments of Forex Bureau where this kind of exchange happens. The next is the bank gives advice on investment and on how you can manage your funds. So once you are a client to the bank, you're banking maybe with KCB or cooperative, I'd go there and then you can have a relationship officer talk to you, creating a rapport, and they will advise you on what to invest on what not to invest on, because they've studied the market, especially the money market, and they know what can happen. And then the bank offers money transfer facilities. And these are methods or means in which you can transfer money from one individual to another individual, or from one company or one organization to another, or from company to an individual, among other people or among other organizations. This service is offered by the bank. Lastly, I wanted to notice the bank acts or provides trustee services. And these services is that they can manage estates of clients. So the real estate business is one growing business in the day-to-day world. So the bank can act as a client on behalf of a real estate business, and at such a point, then the bank becomes a trustee of the estate. On our next class, we want to understand more on the money transfer facilities and which are these facilities the bank has to offer. Thank you. See you in our next class as we discuss exactly that, money transfer facilities.